Hello guys, thank you for joining me. My name is Remy Chingura. Welcome to Peep Valley. I would like to welcome you to this new segment that we've just started. As I promised last week that I was going to show you how I review my trades. So in today's episode, what I'll be doing is I'm going to go through trades, a trade. It will be just one trade for today. I took that trade on the 6th of June. So I'll be just showing you how I do my review. I call it the tape review because I screen record each and every trade that I do, and then I review it. After reviewing it, if it's a successful trade or if it's a playbook pattern, I'll then go on to make it a film session, like part of the film session. So my trading system is broken down into, I'll just say, three or four processes, right? The first one is the pre-market analysis that I do, that I've been sharing with you guys. Then the second one is the actual trading, right, where I place the trades, I open the trade for during that week, right. Then the next one is the trade review. So the trade review is the one that I'll be sharing with you today, and then the last session, it will be the film session. So basically what I do is after recording everything, right, if it's a trade that's successful, that's part of my A plus system, maybe it turns into profit. Or if I review it and know and see that I did everything that's right, I then just record. I put it under my film session. So the film session, what I'll be doing is that I'll be trying to cheat the 10,000 hours. So by reviewing your film, you'll be cutting down on you'll be acquiring more experience using a very short space of time. So I got that from Mike Bellafiore. I'll share the vid. I'm going to share the book, about the book. I have shared it before. All right, so without wasting much of our time, let's get into it. So before we go on, as we can see, uh, we had a higher high, right? Then it went to forming a lower low. As you can see, this low is higher than this low. So this went from a higher high to form a lower low, right? So in terms of structure wise, I was okay. And there is a bearish pin bar, morning star combo, evening star combo. So the reason why I'm rewinding is that I want to make sure that on the weekly chart it was inside the symmetrical triangle. Yes, and as we can see, we have an evening star, the symmetrical triangle. There wasn't a formation of a higher high. Instead, it is a lower high here. So I'm also buying it. I'm also selling it cheap, relatively cheaper. Right. So as you can see, our triangle, it's showing that it's consolidating. The price was consolidating in this. Then on the daily chart, what we can notice also is that within this symmetric triangle, after the price closed outside the symmetric triangle, the price went on to form a lower high. So this high, as I mentioned before, it's lower than this high. So it means that since I'm taking my position here, I'm not buying it too low. I'm actually selling it high because it's coming off a lower high. Then the same thing with the 4-hour chart. So I call this play a WD4. So basically what I'm saying is there is a weekly playbook pattern, and there's a daily playbook pattern, and also a 4-hour playbook pattern. Let's go the second time. So I ran it for about 2 or 3 times so as to pay attention to the little detail that I might have missed or that I would need to pay attention to. Okay, I'm just noticing something also. So what I'm seeing now is, as you can see, right, after the price had formed this higher high, right, as I said, it went on and formed a lower low, right, and we can see that this is an inside bar pattern. After this inside bar pattern, what happened was the price broke the low of the mother candle, closing outside the inside bar. And usually when the price breaks the lower or the higher of the mother candle, I usually place my stop above the mother candle if the mother candle is not too high. So hence my my stop loss is above this mother candle. Also, it's another rule that's there when we are trading a morning star or an evening star. As I said previously, that this is more of like an evening star bearish pin bar combo. One of the rules that I've created for myself or that I had researched is that when you're trading an evening star, you have to place your stop loss above the high of the three candles involved. So in this case, this means that we have this bearish pin bar, we also have this spinning top, and we have this inverted hammer. So this is the high of the three, hence I have placed my stop loss above the high of the three. So we'll continue with our tape. So I just wanted to show you that usually those are some of the things that I might not have seen as I'll be trading or as I'll be in the moment. So as you can see by what I've put in here, right? In the moment I didn't realize that there was an inside bar pattern. Right. So now as I'll be going through it, right? That realization that I've made that there was an inside bar, when I'll be trading again, my mind will tell me to look for the inside bar, to look for something extra, something other than what I'm just seeing from the at the face of the patterns. So hence I will go over it over and over and over again. See, I'm not mentioning it. Okay, so now the next step now is what could we have done, right? So as I mentioned before, the laws of the triangle, I'm supposed to use the height of the triangle as the estimation of my stop loss or my take profit, right? But if, as you can see in this, with this particular trade, I was so conservative. I just managed to get 2 for 1 because I was scared. Probably it's because I had a run of losses. In this case, I was supposed to keep my rules so that I can let my winners run. So now that we have looked at what was happening in the moment, and you have noticed that okay, the other thing that I left was the inside bar. I don't think also I mentioned the issue of higher highs and higher lows. It's something that now I'm seeing at the hindsight, right? But it's something that I should pay attention to. So this is how it helps me because as I'll be reviewing this, right? The moment I'll be in a trade now, I'll be looking at myself as the reviewer and the trader. So I'll be asking myself those questions that I'll be asking myself during the film session and the review session. All right. So now let's go and see, like now, after we have passed this period, what has happened after the triangle. So we're going to look at the hindsight. So what we're going to do is I want to see whether we did the right thing by taking a 2-for-1, or I could have gone for a larger R&R, risk reward ratio, so that I could have let my profits run. So as we can see, we entered right here after the morning star pin bar, bullish pin bar. We entered following this bearish pin bar after the formation of the lower high, which is this section. So because we had based this on a WD4, what we can see is that I made a right decision to take a 2-for-1. But what I could have done was I could have taken another position. Now I call it a core position. I should have taken a core position since it was a WD. Like, I had a playbook weekly and a playbook daily. So I could have taken a core position, right, where I would have even put my stop loss up here, because as you have seen now, what happened is I missed out on this whole part. Remember what I told you, you can count the boxes 1, 2, 3, 4, 5, 6, 7, 8, 9, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. It didn't get to 9, but I could have at least, or it could have been in play by now. I could have been taking the whole lot up to this point. So this is the trade that I took, and this is where you are seeing the recording. So what I do after the review, because I had already done the review for this session, I put the review notes here, right? So as you can see now, I'm saying this is a one good trade, A plus, and it's a WD4 perfectly executed, visible formations of lower highs and lower lows, and good use of price action and structure. As you have seen, the use of lower highs and lower lows, I was setting them, but I was not really precise with them. But now, after taking this review for the second time with you guys now, I've actually learned that, okay, I need to be more precise with my lower lows and lower highs, with my price action, or with my structure. I need to, whenever I do not see that lower low or lower high, I don't take a short trade. When I don't see a higher low, I don't take a long trade. So this is part of playbooking, right? So after a series of such trades where I had a WD4 and traded on the 4, that's when the issue of core position was established, because I was realizing that, okay, because I'm entering at the 4 in the 4 at the 4-hour chart, I'm missing out because of too much fluctuation within the day, right? So the price would reverse and then go on to my direction. But if I determined my stop loss based on the daily chart, I would have stayed in the play for a long time. So hence I've now introduced what I call core positions. So now I have core positions. So in those core positions, I don't need to wait for certain times, because as you can see here, I only trade around 11, depending on the time. I trade around 11, I trade around 11 and 4, that is CAT time. And when it's in summer, I trade around 12 CAT and 4 CAT. Alright, so now what could I have done more? What I would have done is I would have opened a core position, right? Hold it and make room for that, for the same take profit side as the size of the triangle. So my effective risk to reward ratio, because I was going to put my stop loss somewhere around here, right, in the opening here. So I'll just take maybe 2, right? Then I'll take 1, 2, 3, 4, 5. So I could have managed to take a 5-for-1 risk to reward ratio. And because, as I mentioned also in the prior video, that the triangles, yes, they have a very good risk to reward ratio, but they get to hit my stop loss maybe twice or thrice before I get to experience that item. But ultimately, it's a very profitable setup to use. I hope you have learned a lot. So this is one of those trades that during the day, part of my filming session now. I don't think there is any need for me to do a film session with you guys, because basically what I'll be doing that is I'll be just replaying this trade. So I'll continue replaying it. Maybe I can replay it 5 times in a day, right? Just to make sure that those principles that I use to make this trade are engraved into my subconscious mind. So this helps with the issue of 10,000 hours and stuff, because as a swing trader, you don't have much time, or you don't have enough sample size. So by the time I get 10,000 to 10,000 trades, I think it will be in the next 5 or 7 years or 10 years. That's when I'll get to 10,000 years, to 10,000 trades. So what I'll be doing is just I'll be melionating my brain, right? So the idea of melionation, it comes from talent code. It was also recommended by Mike Bellafiore, the one who wrote the One Good Trade. So those two principles. So I'll be trying to gain experience, and so that my mind gets used to doing those things. So before we go now, I'm going to give you the titles and the books from which I got this idea of filming my trades, then after filming my trades, then keep on repeating them so that my mind gets to exercise. So it's because as traders we are more like athletes. So you have to keep practicing, keep practicing, keep practicing. So, right. So I'll start with the trading one. Right. So the trading one, it's One Good Trade by Mike Bellafiore. As I mentioned, I had told you about it. There's a video that has the recommendation of the book. So it recommends that you screen records or you record your trades, so that at the end of the day you are able to replay them and watch where you have made mistakes or where points of improvement. That way it's much better than doing it on the fly. As you can see, as you could tell, I've picked up about some things, some nuggets that I've picked up here and there concerning my trade. Something that I wouldn't have been able to do, or I would have done it at a slower pace if I wasn't recording my trades. But when you are recording now and when you play them, right, definitely you'll be in the reviewer's state of mind. So you are able to pick up a lot of things, such that when you go trade again now, you will be using two states of mind: the reviewers and the trader, or the trading coach and the trader. All right. Then the second book is The Talent Code by Daniel Coyle. Greatness isn't born, it's grown. So this emphasizes the use of deep practice. So deep practice, it's a glimpse of what I was doing right here. My watching the tape over and over and over again. So for day traders, maybe it's when you are backtesting and you're going over and over again. You're doing things sort of on the fly now. That's also another form of practice in trading, using backtesting. The other form of practice is using demo. The day traders are able to have a larger sample size, like on the demo, than us swing traders. Imagine spending the whole year on the demo only to get about less than 1,000 trades. It really doesn't give you that much practice. But if you film your trades, or if you film your trades on the demo, it will be 10 times, as Mike Bellafiore says, it will be 10 times the experience. Because at any point in time, I can just play it. I can just play my video and start watching it, right? And pick up certain things, pick up small details, pick up. So those are the things that athletes do, right? The professional athletes, they spend time in film room, right? They spend a lot of time watching the tape, watching their film, watching the film of the opponents, watching their own film, right? So that they pick up points to improve, points to maximize their strength on, points, areas where to cut certain things. So hence we have seen now what I've seen, because I was doing a trade that was successful, right? I managed to pick up that, okay, what can I do more? I can open a core position and hold it for the whole ride so that I can maximize my R to R. And as you can see also, we also have opportunities to scale in into the trade. For example, this would have been a perfect scaling. This would have been another scaling. This would have been another scaling opportunity. So those are the things that come from the review, right? They are also the things that come from the review using your tape. Because now when I'm using my tape, it's different from just if I did not have the tape, I would have just been looking at this. So I wouldn't have known my state of mind at that particular time. The issue of malienation is also in the talent code. So malienation is when you're practicing something, malin will be wrapping around your nails or the neuro whatever. I'm not a biology guy. So that will be forming the skill. So each time I'll be watching my tapes or each time I'll be trading, there's a wrap of malin that will be layered around. So if you want to be a professional in whatever you're doing, it encourages deliberate, deep practice. Right? So deliberate in the sense that I am the one who is coming up with the initiative to watch my tape, to review my trades, right? And to go over the tape over and over again. Right? That's deliberate. That's deliberate. Then deep now, when I'm doing this film session or this review, I'll be dead focused. My focus will be like 110%. So that's deep now because I'll be trying to get that mailing rep. I'll be trying to maximize on my 10,000 hours. So thank you very much guys for joining me. Enjoy the rest of your weekend. Very much enjoy.